Few names are as well known in the rapidly changing fields of technology and finance as Cathie Wood's ARK Invest. Almost 8% of her investment portfolio is dominated by one name, Tesla. However, why this pioneer of electric cars? What is the secret recipe that has ARK Invest placing such a large wager on Tesla's future? Let's go into the thrilling specifics now. We'll talk about the AI-driven strategy that underpinned Tesla's explosive growth, how robotaxis could change the business, and if this is the right time for you to become involved. However, hold on, don't buckle up just yet. Our path toward autonomy may not go as easily as we'd like, and the road may be tortuous. We can't wait to show you this video, but first, please click the like button and subscribe to Tesla Stock News so that you can receive future updates. Now that we have cleared it out, let's start the video. For the leader in electric vehicles, the promise in software may be undervalued. Tesla stands apart in part because of its remarkable record of electric vehicle sales. Over 5 million electric vehicles have been delivered by Tesla to consumers worldwide since its founding. These aren't simply figures. They show a real movement in consumer preferences in favor of environmentally friendly transportation. Customers' hearts have been won over by Tesla's cars, which have completely changed the way we think about EVs. When we examine Tesla's future goals, the idea of robotaxis becomes clear as a potentially revolutionary prospect. Market forecasts support this promise. A thorough analysis by Markets and Markets projects that the self-driving cab sector would increase at an astounding 91.8% annually between 2023 and 2030. Tesla is leading a revolution in transportation thanks to its exponential development trajectory. The capacity of Tesla to collect and utilize data from its large fleet of automobiles is another noteworthy feature. Since Tesla vehicles are driven all over the world, the business is continuously gathering a vast amount of data about actual driving situations. Tesla uses this data to power its cutting-edge Dogo training computer, which is essential to the company's continued advancement of autonomous driving technology. As a result, performance and safety continue to improve, bringing Tesla one step closer to being fully autonomous. When we look at Tesla's potential for software licensing, Cathie Wood's assessment of the company as a software-as-a-service AI platform becomes more credible. During Tesla's most recent earnings call, Elon Musk himself verified that the company is actively seeking collaborations with large manufacturers to license its whole suite of self-driving hardware and software. This calculated action might open up new sources of income, increase Tesla's market share, and strengthen its standing as the industry leader in tech-driven automobiles. It is important to showcase Tesla's efficiency and scale in producing electric vehicles as it prepares for the eventual introduction of robotaxis. Tesla has continuously increased its profit margins by utilizing economies of scale and creative manufacturing methods. This, along with its capacity to produce EVs, puts Tesla in a position to enter the robotaxi business with ease when the legal environment allows. Tesla has the ability to outperform its competitors in the market, even in the event of regulatory obstacles or development delays. Despite representing a premium valuation, its comparatively high price-to-sales ratio of 9.3 is supported by its well-established strengths, strong brand awareness, and future potential in software and driverless vehicles. Keep at least a small stake in Tesla for investors looking to gain exposure to the electric and autonomous driving revolution. The company may yield significant long-term returns. And to our investors, these figures appear and sound great. Cathie Wood's ARK Invest has become well known for its audacious high-growth stock buys. Wood's extraordinary ability to cut through the noise of cyclical market changes is the foundation of her reputation as an investment maverick. Rather, she steadily navigates her investment vessel by keeping her eyes fixed on the distant future. When it comes to carefully constructing her exchange-traded fund portfolios, Wood is quite positive on Tesla, with the stock accounting for the greatest percentage of ARK's assets, 7.9%, and hence the largest position. Tesla commands a weight of 10.8% in the ARK Innovation ETF, which amplifies this significant investment. Wood has high hopes for Tesla's future, which are shown by ARK's most recent research, which was released in April. By 2027, she believes Tesla's stock price would soar to an astounding $2,000 per share. This estimate is based on a thorough analysis that takes into account a number of variables, such as sales, profitability, and the anticipated stock valuation. It's interesting to note that the company still thinks Tesla's shares could be worth $1,400 even in ARK's worst-case scenario. These predictions are based on the fact that Tesla is a leader in artificial intelligence, and has a strong track record in data collection, two things that are essential for developing its self-driving technology to the point where it can outperform human drivers. ARK thus predicts that by 2027, a sizable amount of Tesla's earnings would come from the rapidly expanding robotaxi industry. It is important to remember that Tesla's stock has already quadrupled in value this year, demonstrating impressive growth. It still trades, however, at a 39% discount to its all-time high of $414 per share. Investors may see an amazing eightfold return on their investment from the present share price of $252 if Wood's prediction of a $2,000 stock price by 2027 comes true. ARK Invest's optimistic forecasts for Tesla rely heavily on the outcome of its robotaxi business. During the first quarter earnings call in 2022, Elon Musk, the CEO of Tesla, made an audacious announcement regarding the ever-changing world of electric vehicles. He stated that Tesla hopes to begin producing robotaxis in large quantities by 2024. In line with Musk's remarks, ARK Invest believes that Tesla will probably start offering its robotaxi services for sale in 2024 or 2025. But ARK's estimates take into account differing odds for various launch schedules. The implausible scenario of robotaxi commercialization in 2023 is assigned a 22% probability, while the possibility of it happening in 2024 is given a 33% chance. A 30% possibility is given to the year 2025, a reflection of the complexity of an undertaking this revolutionary. According to ARK's study, Tesla has a strong chance of making money by 2027. They predict that Tesla might bring in more than $1 trillion in revenue. Notably, robotaxi operations are anticipated to account for a sizable percentage of this astounding amount, minus 44%. It is anticipated that electric vehicles will account for 47% of revenue, with the remaining portion coming from a variety of sources, including insurance, human-driven ride-hailing services, solar panels, and energy solutions. But it is imperative that the issue of timing be addressed. Musk's first goal of producing robotaxis by 2024 might seem ambitious, mostly because it gives just a small window of time for thorough testing and obtaining the necessary governmental permits. Although there has been some progress, with a few Californian robotaxi businesses receiving certification, safety issues remain significant and require close examination. Moreover, Tesla must overcome the difficulty of gathering enough data to surpass human drivers in terms of autopilot performance. The Dogo training computer, an essential part of Tesla's autonomous driving system, is making great progress, but it is still not nearly where it should be. During the second quarter earnings call, Musk admitted this, stating that his earlier projections regarding the development of fully autonomous driving capabilities were not realistic, had been too sanguine. Purchasing Tesla stock in the hope that upcoming robotaxi launches will send it skyrocketing may be too optimistic in light of these factors. However, it's important to emphasize that investors do not have to rely only on ambitious growth projections from fresh projects to support their Tesla investments. For those thinking about the company's long-term growth potential, its current standing in the EV market and continuous improvements make it an interesting proposition. And as usual, Tesla has set its sights on a huge opportunity, the world of robotaxis, led by the visionary Elon Musk. Musk has made no secret of the fact that robotaxis represent a huge growth opportunity for the business. This view is supported by market forecasts, which show that the self-driving taxi industry would grow at an incredible annual pace of 91.8% between 2023 and 2030, Markets and Markets Research. It is anticipated that this growing market will play a major role in the transportation sector, and Tesla is in a unique position to take advantage of this. The main source of Tesla's competitive advantage in this market is the considerable number of cars it already has on the road. These cars serve as information-gathering devices, sending data incessantly to Tesla's state-of-the-art Dogo training system. This priceless information is crucial to improving Tesla's autonomous driving skills and opening the door for a time when its technology will outperform human drivers in terms of dependability and safety. Renowned investor Cathie Wood views Tesla as a powerful player in autonomous driving software in addition to being an electric car maker. According to her, Tesla is changing into a possible AI software as a service platform, which would greatly increase its worth. Interestingly, Wood is not the only one who has this viewpoint. Elon Musk has stated that he is willing to grant other automakers a license to use Tesla's whole suite of self-driving hardware and software. In an announcement made during a recent earnings call, Elon Musk said that Tesla was already in talks with a large automaker about using its autonomous software. Such a step might improve Tesla's already remarkable profit margins and lead to new sources of revenue. Tesla has demonstrated in the past that it can increase profit margins by developing new methods for producing electric vehicles. The company is well positioned to take advantage of its experience, efficiency, and scalability to roll out these autonomous vehicles with the highest level of precision as it prepares for the eventual approval and deployment of robotaxis. The market for electric vehicles is gaining traction, and this has increased rivalry from both new and established automakers. Well-known behemoths like Volkswagen and GM have put a lot of money into expanding their EV product lines. Tesla's pricing power and market share are threatened by this competitive environment. There are several complicated regulations in the way of achieving complete autonomy. Getting autonomous cars approved is a complex process, especially when they are going to be used for business purposes like robotaxis. Safety requirements must be met as well. Tesla's schedule for robotaxi deployment may be seriously hampered by delays or strict regulatory constraints. As an extensive fleet of networked cars gathers data security and privacy issues become critical. One of Tesla's most important duties is to make sure that consumer data is kept safe and handled responsibly. The global supply chain has seen disruptions that have affected manufacturing and production schedules, just like many other businesses. Vulnerabilities in the supply chain can make it more difficult for Tesla to satisfy demand, from problems with logistics to shortages of semiconductors. Even while regulatory issues or delays in development could present difficulties, investors in Tesla's stock could still see profits that exceed the market. For an industry leader with a bright future, Tesla's premium value is not surprising, despite the company carrying a relatively high price-to-sales ratio of 9.3. With its current advantages, strong brand awareness, and potential for expansion in the software and robotaxi industries in the future, Tesla is an appealing addition to a well-diversified investment portfolio. Investing in Tesla, even in a small way, may provide investors a front-row ticket to the revolution in electric and driverless vehicles. There you have it, gentlemen. We've spoken about how the journey of Tesla is an intriguing blend of opportunity and difficulty. Its pursuit of autonomous driving, software innovation, and electric mobility is nothing short of revolutionary, as we've seen today. Investors such as Cathie Wood are drawn to Tesla because of its turbulent journey. Fortunately for me and other investors, they shared their opinions with us in this video. Tesla's journey is characterized by innovation, competition, and the constantly changing landscape of rules and technology, from leading the electric vehicle market to foraying into the realm of robo-taxis. But what do you think? Do you think Tesla has a bright future ahead of it, or do you think the dangers are too great? What do you think will happen to autonomous driving and electric cars in the future? Please share your ideas and observations in the comment area. Please remember to subscribe and like this video before we part ways so that you can receive future updates and insights into Tesla and the fascinating world of electric mobility. We appreciate you visiting Tesla Stock News, and we hope to see you again. I'm grateful.